Michelle McKinnon is here. Joel Shulman is here, and so too is Ashley Webster. Let's talk big-name retailers, because they're putting up some good numbers, and the market's responding. The latest, Dick's Sporting Goods and Nordstrom. Both of them out this morning. Both of them, pretty sure, going straight up this morning. Michelle, my point is, it's the consumer who is rescuing retail and not exactly bailing out, but definitely supporting the economy.
They kind of are bailing out.
They're supporting the economy.
Absolutely. And, Stuart, this is so important because the U.S. economy has two-thirds of the U.S. economy is the consumer. And as long as we can continue to see a very strong consumer, I'm very positive and optimistic of the future. If we see a break in consumer confidence, I might be a little bit worried.
Look at that. Nordstrom up 7%, Dick's Sporting Goods up 9%, but I see L Brands down nearly 9%. All right, Joel, weigh in, please. Yeah. What's wrong?
So Victoria's Secret's down about 62% in earnings from last year. Wow. They've had a decline for a couple of years now. The stock is still negative, despite the fact that the S&P and other large companies are up. I mean, we're looking at other retailers like, Target yesterday, up 20%. Yeah. Walmart. So we're seeing a lot of strength among retailers in general. This is still brand. I mean, it's about 45-year-old company. We often find consumer companies after, it's particularly strong growth, entrepreneurial companies after, 40, 50, 60 years. I mean, they start to decline. So this is one of those things they need to rebrand, reboot. And then, of course, the CEO's got other bigger problems with, some of the controversy in the
Leslie Wexner had a relationship, a financial relationship with Jeffrey Epstein. Right. Is that a problem for the stock?
Well, it's certainly a problem for him. I mean, he's the largest owner of the stock, and certainly that's going to weigh in. And to the extent that there's going to be impropriety traced to him and his company, that's going to leak out bad news daily, for this company.
Well, let me alert you, because the Dow is up triple digits right from the get-go. We weren't expecting this. Maybe it's the non-inverted yield curve that's helping, but we are up 110 points. Now, I've got two items of news on Apple. Number one, they're getting ready to release camera-focused Pro iPhones, new iPads, and a larger MacBook Pro. Why is that important? Is that a big deal, Ash?
I kind of think it is. I mean, look, it's always the same question. Are the changes being made to the iPhones, which a lot of people focus on, are they enough to want you to ditch what you have and upgrade? That's always the big question. This, the iPhones, they're going to have these extra camera on the back that will allow you to pull further back and get a wider perspective. So for people who love that, that could be, I mean, it could be enough to push some people into it. But we're going to get, these basically is going to replace the XS, and the XR is also going to be replaced. It's only just been released, but there's this constant upgrade. It's always a question of whether those upgrades were enough to get people excited.
Also, President Trump seems to have a pretty strong, I'd say a good relationship with Apple's chief, Tim Cook. Is that helping the stock, Joe, do you think?
I'm not sure if that necessarily is going to drive the stock. I mean, we've seen other situations where he's been against Google and Facebook, and that hasn't really hurt the stocks. I mean, I think, to Ash's comment, regarding this phone, I mean, it's really becoming more of a camera than a phone.
It is.
And people are looking at that. I think the big breakthrough, which is not coming out yet in this phone, presumably, is the 5G. That's going to be a monster increase. But, to the extent that they keep tweaking improvements on the camera, and they say that the next version is going to have almost professional quality pictures, I think that's going to be a big deal for the consumer this Christmas time.
Quick word?
Yeah, I think it's a bigger story of you're finally starting to see CEOs really start to talk to Trump about trade, because they're continuing to see this as an issue. And, will Trump bend to maybe some of these CEOs? He might.
He might. If we got that intermediate deal that I've been talking about, that would surely help.
Just rally the markets, and you might see that.
We shall see. Might.
Just one other comment. If you look at the Apple sales, they don't break it out by product, but if you look at it by region, China was actually bigger a few years ago. Then they dipped down. They've come back modestly. But this could be a big deal for Apple with respect to China, because they were higher about 3-4 years ago.
Now, there's another story here, not about Apple. This is about car makers. President Trump has taken a shot at them after they've ignored his emissions proposals. The car makers have made a deal with California for stricter emission standards. But look, let's take the big picture for a second. Michelle, would you recommend that any investor buy the shares of a standalone car company, GM, Ford, Chrysler, etc.?
So a couple things. You've got the car companies trading at much lower discounts to the S&P. They're yielding a better dividend, so I like those things. Would I recommend my clients? No. How we own it via an ETF, so I think it's important to have those car companies in your portfolio. Now, I will say this, Stuart. I think the car companies are smart here, because what happens in 2 years, 4 years, where we have another president and emission standards are a lot harder, they're doing what's in the best interest of their clients and the stockholders, that they're trying to get ahead of the curve, because they've been absolutely behind the curve, and that's why Tesla and other companies are coming up very quickly behind them.
Okay, right now the automakers, all of them except Toyota, are on the upside. You better check that big board. Look at this. Up now over 130 points. That puts us at 26,340. Whatever losses there were last week, I think they're all behind us now. We're at 26,300. Tesla, the stock is up $3 or $4 this morning. Volkswagen denies a report that its CEO is interested in a stake in Tesla. Okay? Tesla's up $3. GameStop, video game retailer, laid off more than 120 corporate staffers. That's about 14% of their corporate jobs. The stock is up 18% on that. Higher profit at BJ's Wholesale. Market loves it. 13% higher. And the spam maker, Hormel. You know, they make a lot more than just spam, okay? Reaffirmed their nice outlook for the future. The stock's up 1.6%. I wish you'd stop laughing. I was born and raised on spam.
I was too.
And you were too.
Yes.
The Americans shipped the stuff over to England to bail us out after World War II.
No.
Never had
And
it.
what's wrong with me?
Wow.
Spam. I'm a spam man. Bitcoin, $10,000 per coin. It's up $26. Price of oil. I like to look at this, please. We're at $56 a barrel. And the regular price of gas, as in the price of regular gas, national average, $2.60. That's all you got. Down for 20 straight days. All States Insurance, their chief executive, Tom Wilson, he says in a New York Times op-ed that you can save capitalism by paying people more. I happen to wildly disagree with that, but Joel, what's your opinion?
Well, there are a couple things related to this. There are two pieces to this puzzle. One is paying people more, and two is just hiring more people, not firing them. And so to the second point, I think that's the big issue for 2020's election. I mean, who's going to help us grow our economy, and who's going to help create jobs? Now, our entrepreneurial companies that we track are growing last year 14%. The non-entrepreneurial companies grew about 3-4%. What's interesting, we've got $1.4 trillion pending of new M&A deals on 5,800 deals. Many of these companies are firing. And so when you look at the big companies who are coming in and trying to improve corporate profits, so the flip side of this is many big companies now, because of low interest rates, whether the 2-year, 10 years kind of or not, they're still going forward with M&A. The deals are not closing down. So when we look at this, we're seeing a lot of layoffs, and I think that's the bigger issue. Paying more, you can always say pay more, but the companies are driven to create value for the shareholders. Shareholders are going to say, pay the people market prices. I mean, and you can cosmetically,
but the Business Roundtable says no, pay everyone more. That's the socially responsible thing to do.
Right. If Wall Street changes and they're actually fine with seeing higher expenses because of higher earnings, then sure. Is that going to happen? I don't think so.
Could I just throw this out? May I just say this?
Spam man,
No, spam. You're killing me. You're killing me. If you let me keep more of my money, instead of paying more than 50% in income taxes to governments, you let me keep more, I'll create far more jobs than the government will by giving it to them.
Yeah. Well,
Don't contradict me, Joel. You're on dangerous ground here.
Not going to be invited back.
No. Well, I'm agreeing that. I mean, I think creating jobs is a thing. Now, what's interesting is many of these this roundtable was talking about paying people more. What people are not talking about, the CEOs are paying themselves more. And we've talked about this in prior shows. Many of the CEOs who have access, to the boards are saying, pay me more. And so we're seeing, many executives in our country making north of 100 million, in some cases 700 to 800 million over 3 years. And we have some executives, companies we talked about today, they're making 800 million in 3 years.
I'm not jealous.
Sounds pretty good.
That's America. It's a wonderful thing. Aim high. Let's go for it.
Yeah.
I know you're not with me. I know deep down you're not with me.
And the reason being because the person who paid himself or herself $800 million over the last 3 years also sold 90% of the stock. You want to take $800 million, fine. Hold on to the stock. The stock was worth about $1.3 billion. All right. Don't sell the stock. You want pay whatever, hold the stock.
I think we'll agree to differ.
Okay.
We'll see you next week. All right. 9:40. Sorry, guys. Michelle, Joel, thank you very much indeed for joining us.